Hello everyone, I'm CA Neeraj B. Welcome back to my YouTube channel @Accounting Buddy NB. In today's comprehensive video lesson on the cash book, the financial heartbeat of every business, we will dive into the real-time recording of cash and bank transactions, a fundamental skill for every aspiring accountant, entrepreneur, or a finance professional. Whether it is cash receipts, payments, or contra entries, understanding how to accurately record, post, and balance these transactions is crucial for maintaining transparent financial records. So, if you are looking to master the art of cash book accounting, this is your go-to lesson. Grab a seat, stay till the end, and do not forget to subscribe and share my channel @Accounting Buddy NB with someone who needs it. Let's get started. Let us first understand the posting of cash receipts or debit side of the single column cash book. Receipts are recorded on the left hand debit side of the cash book, and in order to complete the process of dual aspect, the second aspect of the entry is posted to the credit side of the respective ledger account by writing the words "by cash account" on the date on which the cash is actually received. Let us now understand how the cash payments or the credit side recorded transactions of a single column cash book are posted. Payments are recorded on the left hand of the cash book, and to complete the process of dual aspect, they are posted to the debit side of the respective ledger account by writing the words "to cash account" on the date on which the cash is actually paid. Let us now learn the posting of cash receipts or debit side transactions of a single column cash book basis cash book we prepared previously and now appearing on your screen. In a cash book, all receipts are recorded on the left hand debit side and all the payments are recorded on the right hand credit side, which means cash account is getting debited with receipts and cash account is credited with the payments. Appearing of debit and credit entries in the cash book reflects the ledger nature of the cash book. Now, in order to complete the dual aspect of accounting, the posting of receipts and payments will happen into respective ledger accounts. That makes cash book a journal as well. The opening balance of $25,000 as on 1st December 24 is written on the left hand side of the cash book by writing the words "to balance brought down." Always remember, opening balance in the cash book will always appear on the left hand debit side and is not posted. Now let us understand how the cash sales transaction are posted into the sales account in the ledger. In this illustration, business did two sales transactions, one on 2nd December and another on 28th December for $50,000 and $12,000 respectively. Please note that the cash receipts or the debit side entry of the sales on 2nd December will be posted on the credit side of the sales account on 2nd of December for $50,000. Similarly, the cash sales of $12,000 will be posted on the credit side of the sales account on 28th December by writing the words "by cash account." Now let us understand the posting of money collected from the customer Messer TriStar LLC for $10,000. On 10th of December, the ledger account of TriStar is appearing on your screens. Since TriStar LLC is a customer, let us assume TriStar LLC owes $40,000 to the business. Now the amount of $10,000 received on 10th of December will be posted on the credit side of the account of TriStar LLC by writing the words "by cash account." Let us continue with the posting of other transactions. Red circle transactions we have already discussed. The business owner introduced further capital of $20,000 on 21st of December. The capital account of the business will look like as appearing on your screens. Let us assume the business is already having a capital balance of $50,000 on 1st of December, which is shown on the left hand credit side of the capital account by writing the words by balance brought down. Now the additional capital introduced amounting to $20,000 will be posted on the left hand credit side of the capital account on 21st of December by writing the words by cash account. Let us now learn the posting of cash payments or the credit side transactions of a single column cash book. Cash amounting to $45,000 is deposited in the bank on 3rd of December 24. Bank account will look like as appearing on your screens. Let us assume bank account is having a opening balance shown on the left hand debit side as to balance brought down amounting to $40,000 as on 1st of December 24. Now the cash deposit transaction of $45,000 will be recorded on the left hand debit side of the bank account on the date of deposit, that is 3rd of December 24, by writing the words to cash account. On 4th December, an amount of $12,000 is paid in cash as salary. The salary amount paid will be posted in the salary account on the debit side on 4th of December for $12,000 by writing the words to cash account. Similarly, all the other payments will be posted in the respective ledger accounts of drawings account for $3,000, staff loan account of $2,000, office repair account of $1,000, and electricity expense account of $1,200. The closing cash in hand balance of $52,800 is not posted. It is shown on the asset side of the balance sheet. Please make note of some important points regarding the cash book. The transactions in which the party name is not given is accounted as cash transaction. For example, goods purchased for $20,000 or goods sold for $30,000. Such transactions are considered as cash transactions and are recorded in the cash book. Now, in case of transactions in which the party name is given, for example, goods purchased from Tolly or goods sold to Polly are accounted as credit transactions, therefore they are not recorded in the cash book. Transactions in which both party name and cash are given, for example, goods purchased from Tolly for cash or goods sold to Polly for cash, are considered as cash transactions. Prepare a single column cash book for the following transactions and post them to ledger. First set of transactions are appearing on your screens. On 1st December, business had an opening cash in hand balance amounting to $40,000. Cash book of the business will look like as appearing on your screens. All the cash receipts or inflows are recorded on the left hand debit side of the cash book, and all the cash payments or cash outflows are recorded on the right hand credit side of the cash book. The opening balance of $40,000 is shown on the left hand debit side of the cash book as on 1st of December 24 by writing the words to balance brought down. On 7th December, business purchased goods worth $20,000. Since it is an outflow of cash, it will be recorded on the right hand credit side of the cash book on 7th December by writing the words by purchase account. On 14th December, business sold goods worth $3,000 on cash. Since it is an inflow of cash, it will be recorded on the left hand debit side of the cash book on 14th December by writing the words to sales account. On 21st December, business purchased furniture worth $4,000 in cash. Since it is an outflow of cash, it will be recorded on the right hand credit side of the cash book on 21st December by writing the words by furniture account. On 26th December, business paid salary in cash for $6,000. Since it is an outflow of cash, it will be recorded on the right hand credit side of the cash book on 26th December by writing the words by salary account. On 31st December, business received commission amounting to $3,000 in cash. Since it is an inflow of cash, it will be recorded on the left hand debit side of the cash book on 31st December by writing the words to commission account. Let us now do the balancing of the cash book. First of all, do the totaling of the left hand debit side, and in our example it comes to $73,000. Now if we deduct the total of all the right hand credit side transactions from the total of $73,000, we are left with a balance of $43,000, which will be written on the right hand credit side of the last day of December 24, that is 31st December, by writing the words "by balance carried down." This will make the total of right hand credit side also to $73,000, and thus the cash book is said to be balanced. The closing balance on the last day of December, that is 31st December, will become the opening balance on first day of January 25 and will be shown on the left hand debit side of the cash book by writing the words "to balance brought down." The cash book prepared in the previous slide is displayed on your screen. Let us now do the posting of the entries. As on 1st December 24, opening balance amounting to $40,000 is shown on the left hand debit side of the cash book by writing the words "by balance brought down." The cash balance is not posted and it always shown on the left hand debit side of the cash book. On 7th December, business purchased goods worth $20,000 in cash. This entry of $20,000 will be posted in the purchase account on 7th December on the debit side of the purchase account by writing the words "to cash account." On 14th December, business sold goods for $30,000 in cash. This transaction will be posted in the sales account for $30,000 on 14th December by writing the words "by cash account." On 21st December, business purchased furniture worth $4,000. This entry of $4,000 is posted on the debit side of the furniture account on 21st December by writing the words "to cash account." Let us post the remaining transactions to the respective ledger accounts. The red star transactions, except for opening balance, we have already posted to the respective slides. On 26th December, business paid salary amounting to $6,000 in cash. This entry of $6,000 is posted on 26th of December on the debit side of the salary account by writing the word "to cash account." On 31st December, business received commission amounting to $3,000. This entry of $3,000 is posted on the credit side of the commission account on 31st December by writing the words "by cash account." Let us now know about two column or double column cash book. A double column cash book is a financial record keeping tool and maintains both cash and bank transactions in two separate columns. It acts as a subsidiary book and ledger for recording receipts and payments involving cash and bank accounts. Let us learn features of a double column cash book. Feature number one is it has got two columns both on receipt and payment side, one for cash and another for bank transactions. Double column cash book records dual transactions. It captures both cash and bank related receipts and payments. Double column cash book acts as both a journal for recording transactions and a ledger since balances are carried forward. Double column cash book also records contra entries, transactions between cash and bank account. For example, cash deposited or withdrawal from the bank are recorded on both sides using C, that is the contra marking. Double column cash book maintains the closing balance of both cash and bank balance. The cash column always has a debit balance, while the bank column may have either a debit or a credit balance. In this slide, we will learn about the importance of double column cash book. Double column cash book ensures efficient record keeping. It helps business track cash and bank transactions systematically. It also saves time by eliminating the need for maintaining a separate ledger for cash and bank accounts. It also prevents errors. It ensures proper accounting and helps in detecting discrepancies early. It also helps in providing financial clarity. It offers a clear picture of available cash and bank balances. It helps and facilitates bank reconciliation process by matching bank balances with the bank statements. Let us learn the transactions which are not recorded in a double column cash book. Credit transactions of purchase or sale are not recorded in the cash book. In cash book, only cash and bank transactions are recorded. All the non-cash transactions like depreciation, bad debts or expense provisions are not included in the cash book. Adjustment and transfer transactions like outstanding expenses are recorded in journal and not in the double column cash book. Let us quickly recap the rules of debit and credit for bank accounts. Under traditional classification of accounts, bank is a personal account. The rule of debit and credit for personal account is debit the receiver and credit the giver. And under modern classification of accounts, bank is an asset. The rule of debit and credit for asset account is debit when increases and credit when decreases. In this slide, we will learn about contra entries between cash account and bank account. Contra entries will occur in two circumstances, one when cash is deposited in the bank and the second when the cash is withdrawn from the bank. When cash is deposited in the bank, bank balance increases or bank is the receiver and therefore the amount is recorded on the debit side of the bank column in the cash book. Since cash is deposited in the bank, cash decreases or cash goes out, therefore amount is recorded on the credit side of the cash column of the cash book. When cash is withdrawn from the bank, bank balance decreases or bank is the giver and therefore the amount is recorded on the credit side of the bank column in the cash book. Since cash is withdrawn from the bank, cash increases or cash comes in. Therefore, amount is recorded on the debit side of the cash column in the cash book. In both these cases, one aspect is recorded in the cash column and the second aspect is recorded in the bank column, and the debit or credit is decided basis the nature of the transaction. In this slide, we will further strengthen our understanding of the contra entry for cash deposited in the bank. For example, on 1st of January 2025, $20,000 cash is deposited in the bank account of the business. In this transaction, bank account is debited and cash account is credited. The double column cash book will appear as displayed on your screen. On the left hand debit side of the cash book, entry will be recorded in the bank column for $20,000 on 1st of January 25 by writing the words to cash account. And on the right hand credit side of the cash book, entry will be recorded in the cash column for $20,000 on 1st of January 25 by writing the words by bank account. This contra entry will be denoted by writing the letter C in the journal folio column on both the sides of the cash book. Let us learn contra entry for cash withdrawal from the bank for business use. For example, on 1st of January 25, $9,000 cash is withdrawn from the bank for business use. In this transaction, cash account is debited and bank account is credited. The double column cash book will appear as displayed on your screen. On the left hand debit side of the cash book, entry will be recorded in the cash column for $9,000 on 1st of January 25 by writing the words to bank account. And on the right hand credit side of the cash book, entry will be recorded in the bank column for $9,000 on 1st of January 25 by writing the words by cash account. This contra entry will be denoted by writing the letter C in the journal folio column on both the sides of the cash book. In this slide, let us understand the impact on the double entry column cash book for allowing the cash discount. When the payment is received after allowing cash discount, the amount actually received is recorded in the cash book. A separate journal entry is passed for the cash discount allowed. For example, an amount outstanding from Tully LLC is $10,000 and $9,500 is received from him after allowing a cash discount of $500. Now on the left hand debit side of the cash column of the cash book, $9,500 will be recorded and the corresponding credit entry of $9,500 will be posted in the ledger account of Tully LLC. And a journal entry for cash discount allowed is passed as shown on your screens. Debit cash allowed account and credit Tully account for $500. Let us understand the impact on the double column cash book when the cash discount is received. When while making a payment, business receives a cash discount, the amount actually paid is recorded in the cash book. A separate journal entry is passed for the cash discount received. For example, an amount payable to Molly for $20,000 settled for $19,000 after receiving a cash discount of $1,000. Now on the right hand credit side of the cash column of the cash book, $19,000 will be recorded and the corresponding debit of $19,000 will be given in the ledger account of Molly LLC. And a journal entry for cash discount received is passed as shown below. Debit Molly account and credit discount received account for $1,000. Let us learn about the format of a double column cash book. The specimen of a double column cash book is displayed on your screen. There are two sides of the double column cash book, the left hand debit side and the right hand credit side. All the receipts or the inflows are recorded on the right hand debit side and all the outflows are recorded on the left hand credit side. Double column cash book has 5 columns on each of the debit and the credit side. Column number 1 is for date. In this column, date of the transaction is written. Column number 2 is for particulars. In this column, name of the account under which cash is received or paid is written. In the existing business, cash book starts with the opening balance of cash written on the receipt side as to balance brought down. A new business will not have an opening balance. Column number 3 is for ledger folio and is written as LF. In this column, the number of the ledger page is written to which the debit and the credit aspects of the transaction is posted. Column number 4 is to record all cash transactions. The cash inflow is recorded on the left hand debit side and the cash payments are recorded on the right hand credit side. Column number 5 is to record all bank transactions. All bank inflows or transactions which increases the bank balance are recorded on the left hand debit side, while all the outflows or the transactions which reduces the bank balance are recorded on the right hand credit side. For double column cash book, always remember cash column will either have debit balance or nil balance. Cash column will never have a credit balance. Bank column may have either debit balance, that is the money lying with the bank, or credit balance, that is the bank overdraft. In cash book, with cash and bank columns are maintained, therefore cash and bank accounts are not opened in the ledger. In this slide, let us learn the art of balancing a double column cash book. Cash column of the double column cash book is balanced in the same manner as in the case of a simple cash book. The process is similar for balancing the bank column. Let us learn the balancing of bank column in case of bank overdraft. Bank may allow business to withdraw amount more than deposited. When a bank allows the business to withdraw more than the balance in the account, it is known as bank overdraft. In such a case, the total of the bank column on the right hand credit side will be higher than the total of all the left hand debit side transactions of the bank column. Please note, if debit side is greater than credit side, the bank balance is debit balance and is represented by balance carried forward. However, if the credit side is greater than the debit side, it represents a overdraft. In this slide, we will learn few important points which needs to be remembered about double column cash book. When a new business is started, the capital is introduced in cash or by check or by both modes. If capital is brought in by cash, it is recorded in the cash column on the left hand debit side or the receipt side of the cash book with the words to capital account, and if capital is brought in by check, it is recorded in the bank column on the left hand debit side or the receipt side of the cash book with the words to capital account. If a new cash book is started for an existing business, the opening cash and bank balance is written on the left hand side of the cash book in the cash and the bank column respectively with the words to balance brought down. When a check or a bank draft is deposited on the same day, the amount is recorded in the bank column on the left hand debit side of the cash book. When a check or a bank draft is received but not deposited on the same day, they are recorded in the books of accounts through journal entry. The journal entry in such a situation will be debit check in hand account and credit to customer account from whom the check or the draft is received. When it is actually deposited in the bank, it is recorded in the bank column on the left hand debit side or the receipt side of the cash book with the words to check in hand account. Corresponding credit entry is posted to the ledger account of check in hand account, and the balance in the check in hand account will become nil. My upcoming video on 7th June will be a power-packed lesson on the cash book, which will include complex cash entries and real-life scenarios. In this session, we will move beyond the basics and explore the practical complexities involved in the cash and bank transactions. If you enjoy the content of my video and appreciate my teaching style, please subscribe, share and like my YouTube channel at the rate Accounting Buddy NB. Thank you and goodbye for now. Hello everyone, I'm CA Neeraj B. Welcome back to my YouTube channel at the rate Accounting Buddy NB. I'm so excited because today we are diving into a brand new and super important chapter in our accounting journey, the cash book. If you have ever wondered how businesses keep track of every single penny that comes in and goes out, this video is for you. We will explore what are subsidiary books of accounts and why they are crucial. Different classification of subsidiary books, the purpose of subsidiary books in modern accounting, and then we will zero in on the star of the show, that is what exactly is a cash book, what are its features, and the different type of cash books and much more. So grab your notebook and let's get ready to master the cash book. Let's get started. In this slide, we will understand the meaning of subsidiary books of accounts. Business transactions are numerous and it becomes difficult to record all the transactions in one book of primary entry, that is journal book. It is convenient to maintain a separate book for specific type of transactions, like one record for cash transactions, another to record credit purchases of goods, and yet another record for credit sales of goods. Therefore, subsidiary books are special purpose books in accounting used to record specific type of financial transactions. Instead of recording every transaction directly in the journal ledger, businesses first record them in these books for systematic and efficient accounting. Subsidiary books are special form of journal. It is a subdivision of journal. Journal entry is not passed for the transactions recorded in such books. They are directly posted in the ledger accounts. These books of original or primary entry are also called special purpose books or special journals or subsidiary books. Let us now understand the classification of subsidiary books. Subsidiary books are classified based on the nature of transactions. First is purchase book. Purchase book records all credit purchases of goods meant for resale. Purchase book helps track suppliers' transactions and credit purchases separately from cash purchases. Another subsidiary book is sales book. Sales book records all the credit sales of goods. Sales book maintains a separate record of sales transactions to customers on credit. Another subsidiary book is Purchase Return Book or Return Outward Book. Purchase Return Book records goods returned to supplier due to defects, wrong supplies, or other reasons. Purchase Return Book helps track and adjust supplier account for returns. Another subsidiary book is Sales Return Book or Return Inward Book. Sales Return Book records goods returned by customers due to defects or incorrect delivery. Sales Return Book helps businesses adjust customers' accounts for returns. Another important subsidiary book is Cash Book. Cash book records all cash transactions, including receipts and payments. It serves as both subsidiary book and a ledger, simplifying cash management. Another important subsidiary book is Journal Proper. Journal Proper records transactions that do not fit into another subsidiary books, such as adjustment entries, depreciation, and opening and closing entries. Journal Proper ensures all financial transactions are accounted for systematically. Let us now understand the purpose of subsidiary books. Subsidiary books improves efficiency and reduces workload by categorizing transactions. Subsidiary books ensures accuracy and thus minimizes errors in recording financial transactions. Subsidiary books provides an opportunity to accountants to become specialized in handling specific books and thus improves expertise. Subsidiary books are the easy reference and facilitates quick access to transaction details. Subsidiary books ensures better control and helps to track the outstanding dues and obligations effectively. Let us now understand the most important subsidiary book, that is the cash book. A cash book is a subsidiary book of accounts that records all cash and bank transactions of the business. Transactions includes both receipts and payments. It acts as both a journal and a ledger, meaning cash transactions are first recorded in the cash book before being posted to the other ledgers. Since it records transactions related to cash receipts and payments, it helps in tracking and managing the liquidity of the business effectively. Cash book is a book of primary entry in which cash and bank transactions are recorded in a chronological order, that is, in the order they take place. Receipts are recorded on the debit side of the cash book, while payments are recorded on the credit side. Cash transactions are recorded in the cash column and bank transactions are recorded in the bank column. It is balanced by adjusting the total payments from the total receipts to know the cash in hand and the balance at bank. In this slide, we will learn the features of a cash book. Feature number one is it records all cash and bank transactions. It includes all cash inflows, that is the receipts, and outflows, that is the payments, along with bank transactions. Feature number two is cash book acts as both journal and ledger. The cash book serves the purpose of both a journal where the transactions are first recorded and a ledger as it also acts as a cash account. Feature number three is cash book follows dual entry system. Each transaction has both a debit and a credit entry, ensuring accurate recording. Feature number four is cash book always shows a debit balance for cash. Since business cannot have a negative cash, the cash column in the cash book will never show a credit balance. Feature number 5 is cash book is regularly balanced. The cash book is periodically balanced to check the amount of cash or bank balance available. Feature number 6 is cash book helps in cash management and internal control. It allows business to track daily cash movements and preventing frauds and errors. Feature number 7 is cash book is basis for preparing the financial statements. Transactions recorded in the cash book are eventually used to prepare financial statements such as balance sheet and income statement. Let us now learn about type of cash books. Cash book can be classified into following types. First is single column cash book. This is the simplest type of cash book. It has only one cash column on both debit and credit sides. It records only cash transactions of both receipts and payments. No bank transactions are recorded in this type of cash book. Specimen format of a single column cash book is displayed on your screens. Cash inflows or the receipts are recorded in the debit column while the cash outflows or the payments are recorded on the credit column. Second type of cash book is double column cash book. It has two columns on both debit and credit sides. Cash column to record cash receipts and payments, and bank column to record all the bank related transactions, that is checks received, deposited or issued. Double column cash book is used when businesses frequently deal with banks. Specimen format of a double column cash book is displayed on your screens. It has got two columns, cash column and bank column, to record respective transactions. We will discuss recording of transactions in cash book in detail in our subsequent slides. Third type of cash book which is frequently used by the business is called petty cash book. Petty cash book is used to record small day-to-day expenses like postage, stationery, refreshment, etc. Petty cash book is managed by a petty cashier who receives a fixed amount from the main cashier. Petty cash book helps to reduce the burden of recording minor transactions in the main cash book. A cash book is an essential part of financial accounting that records all cash and bank transactions. Depending on the need of the business, it can be maintained as a single column, double column, or a petty cash book. Proper maintenance of a cash book ensures accurate cash flow management and financial reporting. Let us learn more about single column cash book and its format. Only cash receipts and payments are recorded in simple cash book. Simple cash book looks like an account with one amount column for the debit and one for credit. A specimen of a single column cash book is displayed on your screen. Column number 1 is for date. In this column, the date of the transaction is written. Column number 2 is for particulars. Name of the account holder under which cash is received or paid is written. In the existing business, cash book starts with the opening balance of cash written on the receipt side as to balance brought down. A new business will not have an opening cash balance. Column number 3 is voucher number. The document supporting a transaction is called a voucher. Cash voucher could be either a receipt voucher or a payment voucher. Each voucher has a serial number which is written in this column. Column number 4 is ledger folio. In this column, the number of the ledger page is written to which the debit and the credit aspect of the transaction is posted. Column number 5 is debit. In this column, all the inflows or the receipt amounts are written. Column number 6 is credit. In this column, all the outflows or the payment amounts are written. Let us quickly recap the rules of debit and credit for cash account. Under traditional classification of accounts, cash is a real account. For real account, the rule of debit and credit is debit what comes in and credit what goes out. Under modern classification of accounts, cash is an asset. For asset account, the rule of debit and credit is debit when asset increases and credit when asset decreases. Let us now learn how a single column cash book is balanced. Cash book is balanced like any other account. The total of the receipts column is bigger than or equal to the total of the payments column. The total of all the payment transactions on the credit side of the cash book are deducted from the total of all the receipt transactions on the debit side of the cash account. The difference is written on the credit side as by balance carried down. Thereafter, the credit side of the cash account becomes equal to its debit side. On the first day of the next accounting day or the period, as the case may be, the cash in hand balance on the last day of the previous period is written as to balance brought down to show the cash in hand balance in the beginning of the next accounting period. There are certain important observations regarding single column cash book which should always be remembered. When cash book is maintained, cash account is not opened in the ledger. Cash book is balanced like any other account. It does not record non-cash transactions, checks received or given, cash discount allowed and received. When a receipt or a payment entry is recorded in the cash book, corresponding entry is recorded in the respective ledger accounts. For example, if business has received an amount of $4,000 from Tolly, the debit receipt is passed in the cash book and Tolly's account is credited in the ledger. Cash book will always have a debit balance because the cash paid cannot exceed cash in hand. Let us understand how cash transactions are recorded in a single column cash book with the help of business transactions displayed on your screen. Post recording of these transactions, the cash book will look like as appearing on your screens. Let us now understand the recording of these cash transactions in the cash book. On 1st April, Tully started business and introduced capital in cash amounting to $75,000. This cash inflow transaction of $75,000 will be recorded on the left hand debit side of the cash book on 1st of April by writing the words to capital account. On 1st April, business purchased goods from Polly for cash amounting to $20,000. This cash flow entry of $20,000 will be recorded on the right hand credit side of the cash book on 1st of April by writing the words by purchase account. On 3rd April, business sold goods worth $15,000 on cash. This cash inflow transaction of $15,000 will be recorded on the left hand debit side of the cash book on 1st of April by writing the words to sales account. Now let us do the balancing of cash account for 1st of April. Since cash account will always have a debit balance, let us first do the totaling of the left hand debit side transactions of the cash account, which in our case comes to $90,000. Then from the total of left hand debit side, deduct the total value of all the transactions on the right hand credit side of the cash account. We will left with a balance of $70,000 which will be shown on the right hand credit side of the cash book by writing the words to balance carried down at the end of the day of 1st April. Post which the left hand debit side will be equal to the right hand credit side of the cash account and thus the account is said to be balanced. Next set of business transactions dated 2nd April are appearing on your screens. These transactions in the cash book will look like as appearing on your screens. On 2nd April, the closing balance of $70,000 at the end of the day of 1st April will be written on the left hand debit side of the cash book by writing the words to balance brought down. On 2nd April, Tolly paid office electricity bill amounting to $1,000 by cash. This cash outflow entry of $1,000 will be recorded on the right hand credit side of the cash book on 2nd April by writing the words by electricity expenses. Again on 2nd April, Tolly took cash amounting to $2,000 for his personal use. This cash outflow entry of $2,000 will be recorded on the right hand credit side of the cash book on 2nd April by writing the words by drawings account. Now when from the total of left hand debit side, the total of all the transactions on the right hand credit side of the cash book is deducted, we are left with a balance of $67,000, which will be shown on the right hand credit side of the cash book by writing the words "buy balance carried down" at the end of the day of 2nd April. Post which the left hand debit side will be equal to the right hand credit side of the cash book, and thus the account is said to be balanced. In continuation to previous slide, now the next set of cash transactions dated 3rd of April are appearing on your screen. Post recording of these transactions, the cash book will look like as appearing on your screen. On 3rd April, the closing balance of $67,000 of the previous day, that is 2nd April, will be written on the left hand debit side of the cash account by writing the words "to balance brought down." On 3rd April, goods were again sold for $10,000 in cash. This cash inflow transaction of $10,000 will be recorded on the left hand debit side on 3rd of April by writing the words "to sales account." Again on 3rd of April, an amount of $500 paid in cash to a printer for printing the business letterheads. This cash outflow transaction will be recorded on the right hand credit side of the cash account by writing the words "buy printing and stationery account" on 3rd of April. Now when from the total of left hand debit side, the total of all the right hand credit side transactions is deducted, we are left with an amount of $76,500, which will be shown on the right hand credit side of the cash account by writing the words "buy balance carried down" at the end of the day of 3rd April. Post which left hand debit side will be equal to right hand credit side of the cash account, and thus the account is said to be balanced. Now on 4th of April, the closing balance of $76,500 of the previous day, that is 3rd of April, will be written on the left hand debit side of the cash account by writing the words "to balance brought down." Likewise, each cash transaction is recorded in the cash book on the date on which it is transacted. Cash book from 1st April to 3rd of April will look like as appearing on your screen. All the cash inflow transactions are recorded on the left hand debit side of the cash book on the date on which these transactions took place. Similarly, all the cash outflow transactions are recorded on the right hand credit side of the cash book on the dates on which the cash is actually paid. Now when from the total of left hand debit side of $100,000, the total of all the right hand credit side transactions is deducted, we are left with a balance of $76,500, which will be shown on the right hand credit side of the cash book by writing the words "to balance carried down" at the end of the day of 3rd April. Now the total of the right hand credit side will also become $100,000. Thus the account is said to be balanced. Now on 4th of April, the closing balance of 76,500 of the previous day, that is the 3rd April, will be written on the left hand debit side of the cash account by writing the words "to balance brought down." Let us prepare a single column cash book for the month of December 24 from the following business transactions of Mr. Tooley of Dreamland. Dreamland is the name of his business. Let us understand each transaction. In the beginning of the month, on 1st April, the business has an opening cash in hand balance amounting to $25,000. Cash in hand, being an asset, will have a debit balance and will appear on the left hand debit side of the cash book. On 2nd December, business did a cash sales of $50,000. This transaction will be recorded on the left hand debit side of the cash book since it is an inflow of cash. On 3rd December, business deposited cash amounting to $45,000 in the bank. This transaction will be recorded on the right hand credit side of the cash book since it is an outflow of cash. On 4th December, business received a check of $39,000 after allowing a discount of $1,000 from a customer. Now, whether this transaction will be recorded on the debit or credit side of the cash book? Well, the answer is this transaction will not be recorded in the cash book as it does not affect the cash of the business. On 4th December, staff salary amounting to $12,000 is paid in cash. This transaction will be recorded on the right hand credit side of the cash book since it is an outflow of cash. On 5th December, business owner took $3,000 for his personal use. This transaction will be recorded on the right hand credit side of the cash book since it is an outflow of cash. On 10th December, business collected $10,000 from a customer, Messrs. TriStar LLC. This transaction will be recorded on the left hand debit side of the cash book since it is an outflow of cash. On 15th December, an amount of $2,000 is paid to a staff as advance. This transaction will be recorded on the right hand credit side of the cash book since it is an outflow of cash. On 21st December, business owner introduced $20,000 as capital. This transaction will be recorded on the left hand debit side of the cash book as it is an inflow of cash. On 25th December, business paid $1,000 for office repairs in cash. This transaction will be recorded on the right hand credit side of the cash book as it is an outflow of cash. On 28th December, business again did a cash sales for $12,000. This transaction will be recorded on the left hand debit side of the cash book as it is an inflow of cash. On 30th December, business paid electricity bill for $1,200 in cash. This transaction will be recorded on the right hand credit side of the cash book as it is a cash outflow. Let us learn how the cash transactions as per the previous slide will be recorded in the cash book. The opening balance of $25,000 will be shown on the left hand debit side of the cash book by writing the words to balance brought down on 1st of December 24. Now all the cash inflow transactions of the sales, collection from the customer TriStar LLC, capital introduced are recorded on the left hand debit side or the receipt side of the cash book on the respective dates on which the business actually received cash. All the cash outflow transactions will be recorded on the right hand credit side or the payment side of the cash book. Therefore, all the cash outflow or the transactions which results into decrease in the cash balance, that is the bank deposit, salary payments, cash taken for personal use, staff loan, office repair and electricity expenses transactions are recorded on the right hand credit side of the cash account on the respective dates on which the transactions have actually occurred. Cash being an asset and the fact that the business cannot pay more than the available cash, for doing the cash account balancing, let us do the total of the left hand debit side of the cash account, which in our illustration comes to $117,000. Now, if you deduct the total of all the right hand credit side transactions from the left hand debit side total of 117,000, we are left with a balance of $52,800, which is written as by balance carried down on the last day of the month of December 24, thus making the total of the right hand credit side also to $117,000. Therefore, the left hand debit side and the right hand credit side of the cash account is now balanced. The closing cash balance of $52,800 on the last day of December 24 will become the opening balance on the first day of January 25 and will be shown on the left hand debit side of the cash book by writing the words to balance brought down. Always remember, cash book cannot have a credit balance. Cash column in the cash book cannot show the credit balance because cash payments cannot exceed cash in hand. When cash payments are equal to the cash in hand, the cash book will show a nil balance. Cash being an asset will always have a debit balance. all the receipts are recorded on the left hand debit side of the cash book implies that the cash book will always have a debit or a nil balance. In next slides, we will learn in detail the process of posting from the single column cash book to the respective ledger accounts, which includes the posting of cash receipts on the debit side of a single column cash book and the posting of cash payments or credit side of a single column cash book. In my upcoming video of part 2 in this series of the topic, the cash book on 31st May 25, we will cover posting of cash receipts and payment to various ledger accounts, single and double column cash book, contra entries, treatment of cash discounts, cash entries posting rules, and the cash book formats. If you enjoy the content of this video and appreciate my teaching style, please subscribe, share and like my YouTube channel @AccountingBuddyNB. Thank you and goodbye for now.